Well, hello everybody, I'm LA Little, and this is your weekly NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened last week and what does it tell us about the coming one. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. As far as what happened last week, it was a tough week in that everything that was good was bad by the end of the week. Had a nice or a decent sized gain coming into the end of the week, and then they just started giving it up, right? Everything ends up almost flat, negative slightly in some cases, slightly positive. On the year, down 5% on the S&P 500. If we take a look at the charts, and we'll start with the S&P 500, and if you look at it, I've got the weekly view up. If you look at it, what you're going to see is a failure. And that failure takes the place um, of this, when I say it's a failure, I'm talking about this high volume bar, low here, high there. So essentially you go over that bar, right? You end up getting over it in this area here. You get back underneath it. You're back into the bar now, and you're trying to head back down. So you go up, you can't stay up, you fall back underneath it. And what you were doing at the same time is that you were doing a bearish retest and regenerate off these prior swing point lows over here. And that's the lower set. There's actually higher ones up here. And so even on the weakest part, you were unable to get higher. You go into it, you can't get higher, you fall back down. And if you come and draw in the potential ABCD structure now that does exist, that high now is up in that area, and that ABCD structure projects down quite a ways. And actually, I probably projected a little bit too far. Maybe it's about into there. But still, it's under, if it breaks this way, it's under those October lows. And so the setup now is in place for a further push to the downside. Now, given how far it is to the downside, if we draw in some ranges, for example, we've got a range there, we've got another one up underneath it, and then we've got the final one, right, that comes into those lows. You're fighting this range still. You were trying to get up, or at least the price points were trying to get up into that higher range to test, into that area. Didn't quite get there, only got to here, but got close and then gave it all up, right? Now you're back in fighting that equidistant range, trying to get back inside the lower range. If you get deep enough inside the lower range, then the lows become the target, and then eventually these October lows. That's the S&P of 500. If we move over and take a look at the strongest indexes, NASDAQ. And here on the NASDAQ, I'm going to start with the daily. And the reason for that is you had a bearish retest regenerate, do a full retest. In other words, you got all the way to the top of that zone, rejected, pushed back down, volume expands on options expiration. This thing's going to try to come back and get into this bar. And so the price point now where it's trying to go is back down into here. We'll see how far it gets. If we look over at the weekly now, you have the same setup over here that we just talked about on the S&P 500. And that is that you've had a range taking place up above. Now you've got the lower, area down here. And if you extend that to the October lows, right, you've kind of got an area down into that zone. And so, they're not quite drawn right. These two are a little bit different, but, the bottom two. But essentially, it's the same idea. And if you take and you draw in the ABCD structure, you have the same exact ABC type structure now in place to allow this one, right, to project quite a bit lower as well and to break those October lows if it extends. And so the structure now in both the weaker and the stronger cases is in place to try to break down lower. And what you also had on all the indexes this week is you actually broke underneath that high volume, wide price spread bars high, and you're up underneath it now. You stay in it, the deeper you get into it, the more odds there are that you're going to reach all the way down the backside. It's true of the EDX, it's true of the Dow, and it's also true of the Russell. If we move over to the world markets and we take a look at those, you actually have that same exact structure taking place in the European markets. Here you can see it quite pronounced. I've got the DAX up. The DAX has the high here. It's into that high, right? High volume as it comes back. We're going to try to get into this low on this push. Now, these indexes don't have as far to fall as ours do, as the US markets. If you look at it on a weekly time frame, right? They had topped out a long time before we did in terms of big move up and then back down. You've got the ABCD structure here in place, and if it projects down, what's it going to do? Well, it's going to go test those October lows just as well. So you have the exact same thing over in Europe. Asia, a little bit different. We'll use the Hong Kong market as our market to look at. Here you haven't had nearly the kind of bounce that you've had elsewhere. That retest regenerate zone is up into here, and this is on the daily chart, mind you. Haven't even been able to get back up there. You do have a couple swing point highs. If it does get some juice, right, it can test up into that area and get a decent push going. But I don't know if it's going to, because if we pull over and we look at the weekly charts, right? The weekly charts have the same sort of structure, ABCDs down as well. They've got this bearish retest, overlapping bearish retest, regenerate zone. And so this area here at the bottom and this area at the top become extremely hard to get over. If you look at where price went to, it went right to the bottom of this bar almost. The low here, 22,529 back on December 15th, which it's already taken out. The bounce this week takes it up to 22,203. So you almost get back up there, not quite. And you don't have any volume as you're coming back into it. This looks like a tough spot. And then if you go over and look at some more things, you've got this huge volume push to the downside, right? That push to the downside with that huge volume, that area is going to be extremely hard on the way back up. That's a little bit higher. So even if you get back on the daily to that bearish retest regen, it's going to be extremely hard to get much higher. And then finally, in Hong Kong, if you draw in your ABCD structures, you've actually got an A structure that goes all the way down to here. And you're just finally starting to get a small bounce. And if that starts to extend from this area, or even if it gets up farther, right, and you extend down from there, that's still going to be an extremely long move to the downside. That's Hong Kong, and I suspect that's going to be Shanghai as well. Elsewhere in Asia, you've actually got some decent bounces going in some places like Taipei. That's got a nice little bounce going. Same thing in Korea I was looking at. So you've got some decent bounces going elsewhere. And so those emerging markets outside of Hong Kong and Shanghai are looking a little bit better. And I believe actually, let's pull up Japan. I think Japan is struggling, but it's hanging in there. That's the daily and the weekly. So the weekly got under back over, less volume. This is probably going to hang for now. What's the story? Well, the Fed decided that they couldn't raise rates. That in the short term actually helps to some degree the emerging markets because it takes some of the pressure off of them. But what you saw Friday is not a precursor to something good, but to something bad. And that is that if I look at Friday, Thursday's bar was a big spike down in the dollar off of the Fed news that they could not raise rates. But what happens Friday? You get a takeaway bar back to the upside as it tries to test into this low right about there. As it tries to test into that low bars high, they reject, they flip around, they take it all back. This thing's going to try to push higher. If the dollar's pushing higher, that's going to hurt currencies in Europe. It's going to hurt the currency. In other words, it's going to drive the European currency down. That's going to help those markets. It's going to drive all the currencies down pretty much across the board. And that maybe that's beneficial initially to those markets, but it's not beneficial to the U.S. market if it really starts to push to the upside. So I think the dollar is the first crack in what should have been a continuation to the downside on the strength of the U.S. Backed currency, and I think that's going to have ripples elsewhere uh, as a result. For example, commodities will get hit. All those things that look like they benefited Thursday from the Fed's decision, immediately on Friday, it looks like it's starting to reverse it. Finally, if we take a look at some of the viewer questions and then come back and do the final wrap, I want to pick up a couple questions from a viewer from last week that I didn't get to. The first one has to do with entry and exit. And he was looking at the charts and he was saying, how do you use these zones, right? How do you use these zones in your trading? For example, if I wanted to buy, and I've got Apple up here, if I wanted to buy Apple, do you buy the stock when it tests uh, and fails to close, outside a support or resistance zone, or do you trade as the stock is leaving the support and resistance zone on the way to the next zone? And ideally, what you're trying to do with these trades, the zones. Well, first of all, let's talk about what the zone is. The zone is an algorithm that looks at three things. It looks at swing points, it looks at wide price spread anchor bars, it looks at heavy volume anchor bars, and it looks at swing point anchor bars, right? And those anchor bars are what you see here in blue. So it can either be, a light colored blue or it can be a dark colored blue. Those zones, once drawn, for example, if we draw this one out, you actually have a zone that's been created in this area right here. Now, as price comes back into that zone, the zone, if it's a support zone, is telling you should find buyers at that area. So ideally what you want to do is you want to see price come into that area and you want to see it flip around and come back out. In other words, the sellers quit selling, the buyers start buying. Once you see that, right, then you know that zone in fact is real. And so if you look at Apple on Friday, for example, that's what you got, right? Apple pushes into the zone, flips around, closes outside of the zone. Now, it's not the only thing you can look at, because if you look at this, the only area that this doesn't have support and resistance, right, is this little bitty area in here. So you don't have a lot to work with. In other words, if it comes up into the resistance zone, you're going to find sellers more than likely. If it comes into the support zone down here, you're going to find buyers. And so it's just bouncing in between them and has been for about a week. Now, at some point, it's going to get deeper into one of these. In other words, it's going to trade back into this, and you're not going to find sellers at the bottom. Then that starts to tell you something different. For example, you got a swing point high over here. You've got this retest regenerate zone, right? There's other things that you can start keying on, and you could say, okay, if it tests back into this area and then fails at this higher price point, right? Now you have a support zone that's lower, and you might think of, if you want, you might think about trading Apple short. Now, I wouldn't trade Apple short, but I mean, that's how you would use these things. On the backside, if this were to get rejected and come in deeper to the swing point low and then find support in that area, now you could trade Apple back the other way. In other words, it comes in to the zone, trades to the bottom of the zone, finds buyers. That's a good place to buy it. Put your stop very close underneath, right, and shoot for the move back to the upside. So the zones really, you have to understand what they're telling you, and they're telling you that's where you should see buyers or sellers begin to do their thing. and then you look to see what actually happens and use that information to make decisions about what you may or may not want to do. Taking one more question, there was another question that had to do with the stock 21st Century Fox, right? And the thing here, and this was true across many, many stocks, was that you had a bunch of swing point lows that were lined up together. And I'm looking at the weekly. This was also true on the daily up in this area. And this big bar down is a breakdown bar. When it broke through this area, and so these swing point lows all began to fail, right? Once it does that, that sets up the potential for a short trade on the bounce, and that's what the question was about. The question was, would this be a good short trade on this bounce on that very next bar? And so as you come back up, is that where you short? Well, yes, indeed, that is a good short. And the reason for it is if you take this lowest swing point low, this stock, if it does what it should do, should not trade back above this area. So as it comes in to do the immediate retest, regenerate, your risk area is back just above the zone, right? ATR above the zone, or 25% of the 10-day ATR, and you're shooting for lower prices, which in fact you got lower prices. Yeah, that's the way you trade that thing. Yeah, that's a high probability breakdown and should carry 2 to 3 bars, which it has done more than 2 to 3 bars. Okay, so that's that. Let's come back and do the weekly wrap.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
Okay, so as we come back here to wrap this thing up, last week's failure into week was not a good thing. This push up, and I'm looking at the S&P 500. This push up followed by a good downsized bar on options. That's volume off the top. That's never, almost never a good thing. The fact that the S&P 500 had range traded up here for 6 to 7 months says that it's probably going to take a little while before it really starts to, totally break down. And the fact that it's down here now, ready to test to get into the lower zone again. If this area and this swing point low that we have here, right, if this swing point low can't hold price, the odds of a break, right, to test that swing point low and potentially all the way to the bottom increase, and this market's going to find more damage to the downside. If you look at this on the weekly, as we looked at already, you had a failure back into the swing point lows. That's a bearish retest, going to try to regenerate lower. I think it's going to be hard to break this out right now, right? That's quite a ways down still, and it's about equidistant from the first breakdown bar's top up here. So more than likely, you get back into maybe this area or something this week at worst. But last week's failure end of week off the Fed I can't interpret it as a good thing. It's a bad thing. And my suspicion is that you're going to see pressure this week as a result of it. The question is how much pressure? Can you actually drive this market, or not you, but the market itself? Can it drive all the way down to test these lows and potentially even drive to the October lows? Or is it going to find support up in this area? That's really the question. To get back up and run higher, probabilities are certainly a lot lower now than they were. And so, if I'm bullish, I'm just hoping, right? as a bull, I'm just hoping it holds this area for now, and then eventually, can make a run back up. But for now, the question is can it hold that? I suspect you're going to see a lot of pressure this week, and you're going to see the shorts and even some of the longs bailing out and pricing pressure as a result of that. I'll catch up with you tomorrow. Have a great night, and I'll see you then. Good night.